Good evening and welcome back to Be Rich. One class of investors are going to be in serious trouble. They have had a long bull run. I am not talking about the equity markets, and the equity markets are definitely going to correct. And this is not only true of India, these markets will correct worldwide. But the real market pain is going to come in government bonds. Government bonds are going to pay a heavy price, especially those who are owning treasuries. US treasuries, European bonds, and Bank of England English bonds, what is called as the gilts, and also the Indian stocks, Indian bonds, or bonds anywhere except Japanese bonds, are going to take a heavy hit. Already, if those who are holding government gilts would have seen a drop in bond prices. That is, if you are holding a mutual fund which invests in primarily in government bonds, you would have seen a correction. And this correction is going to get worse over a period of time. Why is this going to happen? This is going to happen because central banks around the world are on the march. That means that their interest rates are going up. The Fed has already increased rates by 0.25, and it has had no impact on a roaring economy which have highly overheated. In fact, the jobless claims came down and the unemployment rate is at 3.6. This means that in the United States, employment has fallen below what is called NAIRU. NAIRU is the natural rate of employment below which, if employment dips, inflation will take charge. This means that there is demand for work but no worker, and that is the case in the United States. The United States is reached full employment and still prices are rising. Of course, the price of crude has corrected in the last week. This is because the Americans have started to release crude in the open market from their strategic reserves. And also, there is cool down because most of China, the major centers in China, are under lockdown. This means that demand for crude in China is expected to cool. These factors have made sure that the Brent is trading at 102. But these are short term phenomena. The war in Ukraine is not going to get over soon, and all talks of peace are futile. This means crude, edible oil, and food article prices are going to remain on the boil. Russia is still talking to OPEC, and OPEC wants to keep Russia in spite of US displeasure. Saudi Arabia is not playing ball with the Americans by ramping up production to cool oil prices. So, oil prices are still extremely high. So, this means as the summer rolls out in the United States and the driving season starts, immediately prices of gasoline and therefore crude are expected to rise. Also, inflation, which is at a 40-year high, shows no sign of slowing down. And even the base effect, which means inflation which was high last year, the base being high effect is also not going to kick in anytime soon. It was expected to kick in this year. And when inflation remains persistently high, as it has remained so far, this will mean that employees will start demanding more. And when employees start demanding more, then wage inflation starts to kick in. And this starts to create a negative feedback loop. When wage inflation starts, then inflationary expectations start to feed in. That is, people decide that things are going to be more costly next year than what it is today, and therefore start to demand higher prices. And this feeds in to prices. The Fed has not acted enough. It has been very dovish, and it has been dovish because of the pandemic and has not yet stopped expanding its balance sheet. Even as of last quarter, the balance sheet of the Federal Reserve was higher, in spite of it deciding to increase interest rates. There was one vote in the Federal Reserve Board for a zero point 0.5 increase, but the rest did not agree. But situation has turned for the worse and inflation is expected to surge, and therefore a zero point 0.5 hike is expected in the next Fed meeting. A jump of 0.5 means an interest rate which was supposed to come over 4 months is now coming in one go. This will jolt prices even higher. This means yields of government bonds will increase, and if yields of government bonds increase, automatically bond prices will drop. This means there is going to be huge losses in those areas where we own gilt. So those who hold short-term treasury bonds will take a big hit. Over a period of this year, even corporate bonds rates will go up. As the value of corporate bonds go up, the value of existing high-end corporate bonds will also correct. This will mean that there will be huge pressure on mutual funds which have to show mark to market losses even if they are holding for the long term. Therefore, bond funds as such will begin to lose money. This will lead to a negative feedback loop where bond funds will have to withdraw, will see withdrawal of cash. This will fuel further sales and will lead to a negative feedback loop. In fact, their fear is that higher interest rates could lead to recession 1 year down the line. But the hands of the Federal Reserve and the European Central Bank are tied. If they are not seen to be decisive in acting at this point of time, then the inflation will go out of control. So, those who already hold existing bond funds will face some losses. But since the yield goes up, the price of bonds will become cheap and new investors will find it very attractive to buy bonds. This I am talking about bonds not in emerging markets but bonds in in European and American markets. So for fresh investors, this is a great time to buy bonds. For those who are already invested in bond funds and have exposure to bonds, it could be a painful time. Thank you for watching. Be rich. If you like this video, kindly hit the subscription button and turn on the bell notification. If you do not turn on the notification, you will be not notified every time we put a video. If you do like this content, kindly share it among your friends and relatives. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.